Robschild, no investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Monday, June 16th, 2025. Today's episode begins with our headline, Manufacturers Panic. No one's stockpiling ahead of Trump's July tariff wave. It's not the most exciting headline coming out today, I gotta admit, but I think it's a very important one. The Empire State Manufacturing Survey came out today at negative 16 when it was expected less negative than the previous months. If you go to Market Watch and click on that link, it brings you straight to the page that shows you the actual report. It's a 5-page report, not that hard to understand. The biggest key takeaway here is general business conditions deteriorating more instead of less. At the very end of this chart, you see it ticking down instead of ticking slightly up. I want to mention, too, that, we've been mostly negative. It looked like towards the end of 2024, maybe we were getting out of this slump in general business conditions, according to the survey. But starting in 2025, we're seeing lower highs and lower lows. It seems to be trending down. The way this survey works is they report on the percentage of companies that are reporting higher, like better general business conditions versus lower. So for June, we had higher, only 17%. Saying, and then, but 33% reporting lower general business conditions. A lot of pieces of this, when you break it down, look pretty bad. When it comes to new orders, dropping pretty significantly, shipping, unfilled orders. In other words, how many orders are sitting on the books that they still have to fill? They're filling them all up. That's when this goes negative, it means they're not getting more and more orders. They're just filling the ones that they already have. And at the same time, interestingly, inventories is going down to 0. In other words, down to no change. In other words, businesses aren't preparing for a wave of more demand, of higher demand. Now, in this survey, the companies are also asked, well, what about, 6 months from now? How do you see things going? And they're saying, well, it's got to be better than right now, because right now it's pretty bad. So apparently businesses have stronger forward outlook for the most part. So they're saying things are going to get better, but they're not preparing for things to get better. And this is all with the Trump tariffs coming back online in just a few weeks. They're not ordering lots of stuff, building lots of stuff to sell to get ahead of this, to supposedly increasing demand in the future. It's not what's happening. So they're saying one thing and they're doing something different. What they're doing says slow down. What they're saying is, well, we think things are going to get better. It's not a pretty report the way that I look at it. The other headline for today, Mr. Market says the Iran-Israel conflict is essentially over, apparently, and all markets pointed to risk-on mentality. And we'll take a look at some of those charts today in a little bit. On to the community topics. What moves, if any, did you make today? Comment below. Robschild sits on hands. I was looking for fun opportunities of things to, great setups, especially for just like day trades today, because I had time to do that. And I didn't see anything. This is the problem with trying to do things in the summer. A lot of the pros go home. They turn their computers off. And markets really do act that way a lot of the time in the summer months. But anyway, coming up later this week, Wednesday, we have the initial jobless claims and continued claims. Usually that comes out on Thursday, but this week, Thursday, markets are closed for Juneteenth. And then the other things still coming up, continuous tariff updates, which I'm sure, soon as the news calms down about what's going on in Minnesota and Israel and all this, we'll go right back into what's going on with the tariffs. Mr. Market seems to have forgotten about the tariffs for the moment, it seems. That is bound to come back in full force in the news and everything, in my estimation. Also, we have federal budget updates. We're still waiting on the Senate to duke it out over what they, think they're going to have to do. They should be giving an answer by July 4th is what I'm gathering right now. And then, any other updates with the Iran-Israel conflict or war or whatever you want to call it. As always, thank you for watching, subscribing, commenting, and supporting. I am only about 46 subscribers or so away from 1,000 subscribers. Thank you so much for being a subscriber, watching Robschild's content, and engaging in the community with your comments. I made no changes to the daily reminders macro views. Click the website in the description to read through them. And no changes to the crystal ball ratings nor the Robschild portfolio. Moving on to the charts. Starting with the S&P 500, getting sort of a relief rally to the upside, gaining almost 1% today. On crude oil dropping a little bit because the worries about what's going on in Iran are sort of dissipating. It looks like this may be fading out, and so Mr. Market said, oh wait, well, let's buy some stocks, forget everything else that's going on that can affect markets. Right now, that's the focus, and so Mr. Market goes up 1%. I laugh a little bit because it seems so short-sighted to me, but I don't know. I'm just a guy with a crystal ball. Also, just like, you could draw a million different lines all over this chart. I could fill this chart with infinite numbers of lines. But overall, what do I see? Does this look bullish? Does this look bearish? Well, just from the perspective that we went straight up and then we had a dip and it got bought and went up again, and now we're going sideways. We're going sideways right now. It could go up or down, in my opinion. With the attacks going on between Iran and Israel and the surge in oil, we had the VIX pop up a little bit. This is the fear index, that prices options contracts. It measures implied volatility of the S&P 500. We're back into contango. This is below 20. Like I said at the beginning of the video, we're back into risk on mode. It's very clear across all markets right now. And in a risk on mode environment, TLT, my favorite place to be, is not going to necessarily get a bid. And it didn't. It went down by about 1% today, breaking out to the downside out of this. You see these two yellow lines. Sorry for all of the lines. These two yellow lines, I said literally last week, it looks like we were coiling up in this. I thought we'd get a little higher in this wedge before breaking down. Instead, we broke down to the downside today. No idea where this is going from here. Although now that we broke out of this, I'll probably change the way that I have these lines here. To my eye now, well, I can just delete this. As you can see, this blue shaded area is where I see we are right now. It looks to me like we're bouncing up and down in this inclining channel for the moment. Bitcoin, risk on. It's up almost 3% today. Gold engulfed Friday's candle to the downside. So the red candle means we started up here and we swallowed all of Friday's candle almost. It was a little larger last time I looked at it. And we still have 25 minutes on the clock. But it's a large move to the downside, but this coincides with the idea that it's risk on. If it's okay to invest in stocks, then why would you bother putting money in gold? With gold being this high, you're going to have investors taking their money out of gold and putting it into stocks. That's the risk on. That's your typical risk on mentality. It's really the theme of the day. Next, I'm going to look at the total too. This is all cryptocurrencies minus Bitcoin, also going up about 3%. Again, another sign of risk on mentality. And it all has to do with the Israel-Iran thing appearing to be fading. It's just all the markets are saying the same thing. Crude oil dropping. The reason it spiked was, is Iran going to affect the cost of crude oil around the world? And now it's cooling off. Notably not back down to the range that we had before. So it's still a little nervous in this market, the crude oil market. It wants a little more clarity on it's going to want a sell the news kind of event, like, yeah, it actually is over, and Iran is like, is calming his horses or however you want to put it. The last chart that I have today that I think is important to take a look at and be aware of is the XY, the dollar index. Still, for the third trading day in the row now, sort of testing this 97.68 level. Every trader, even economists, even Lynn Alden referred to this as the fun zone, like the area, like, is the dollar about to collapse or not? We'll see. Everybody has their eye on the dollar right now, trying to figure out what it's going to do. So all in all, the real economic data to me is still, more and more of it is coming out weaker and weaker. Even the initial claims. I didn't even talk about the initial claims Thursday. I only talked about the continuing claims, looking like it kept going up. The initial claims are going higher and higher, the last one being 250,000. If it keeps climbing, watch out. Wednesday, it could be pretty eventful. We also have a bunch of data coming out tomorrow. I'll mention it. Any of it that seems important. Retail sales are coming out tomorrow. And yeah, just to repeat one more time, Mr. Market is in risk on mode because the Iran-Israel conflict appears to be ending, and therefore everything is just honky-dory. And that's all for me in my crystal ball. I hope you enjoyed. Thank you for watching, and see you next time. Robschild.